From the promise of new technologies to the innovative and youthful population shaping the continent's future, Africa is full of optimism worth celebrating. Hi, I'm Aloysius Uche Odu, Director of the Africa Growth Initiative at the Brookings Institution and host of Foresight Africa. Since 2011, the Africa Growth Initiative has published a high-profile report on the key events and trends likely to shape affairs in our continent in the year ahead. Entitled Foresight Africa, the goal of the publication is to bring attention to these burning issues and support policy actions to address them. With this podcast, we intend to engage report authors as well as other figures, policymakers, captains of industry, scholars, and youths across Africa and elsewhere. Our guest today is Mike Ogbalu. Mike is the CEO of a new payment system called the Pan-African Payment and Settlement System, PAPSS. Mike wrote a brilliant viewpoint on PAPSS in Foresight Africa 2022, which we launched earlier in January this year. PAPSS was rolled out by the African Exim Bank and the African Continental Free Trade Area Secretariat last year to simplify cross-border transactions and reduce dependence on hard foreign currencies. So what has been the progress to date? What are the opportunities? What are the challenges to this new continental initiative? Mike, I'm delighted to welcome you to our show.
Thank you very much for having me. My pleasure being here.
Great. Our listeners would love to know a little bit more about your background, Mike. Could you briefly share with us your journey to your current position as CEO of the new payment system?
Thank you very much. I am Nigerian by birth, and I have a background in engineering. I graduated way back in 97, and I have spent most of my life in technology, in banking, and then in payments. Over the years, I worked in a number of banks in Nigeria, and I did both retail banking, commercial banking, and then I played a role in technology in those banks. And then subsequently, I would say that I have evolved. I used to be the guy that was excited about making technology work. I would jump on the table at the drop of a hat. But I moved to being the person that was excited about, yes, it works, but does it make money? And nowadays, my life is more about, yes, it works, yes, it makes money, but does it make impact? So I joined Afrexim Bank last year to lead the charge to put institutionalize PAPSS on the African continent and see it transform the way we do trade on the continent.
Very, very interesting. I like the transition into the technology guy who makes sure the system works to the guy who makes sure the system makes money, and now to the PAPSS, a new initiative which, if all goes well from what we hear, African nations will save over 5 billion in many of the estimates I've seen annually through this system. So let's delve into the PAPSS itself. It's indeed a key pillar of the African Continental Free Trade Area. What role is envisaged for this particular payment system, and how is it playing out so far?
Okay, so when you look at the ambitions of the continent, so well captured in AFTA, you find that it was resolved that a prosperous continent is a trading continent. And to that extent, we needed to be able to increase the volume of trade on the continent. However, a lot of other moves have been made in the past, looking at tariff and non-tariff barriers. But now the continent has come to the realization that payment is actually that trigger for trade. And therefore, if you are able to solve the payment challenge, then you are likely to have that impact on trade. So what PAPSS is trying to do is actually bringing together key stakeholders on the continent to put in place a financial payment rail that will connect all the different countries, guarantee that transactions can be done instantly anywhere on the African continent, and actually now, by so doing, bring about efficiencies that will have an accelerating effect on trade. Now, if you look at today, it will be crazy for someone who wants to go from Lagos to Abuja to first of all travel to Accra, travel to Senegal, before moving from Senegal to Abuja. So if that is crazy for a human being to travel, today you don't have goods. Nobody tries to move goods from Lagos to Abuja and then first of all takes it through all those destinations before bringing it to Abuja. Why is it so with money? Why is it that when it comes to money, transactions that originate on the African continent and terminate on the African continent, those funds will have to travel through other parts of the world before coming back on the continent? So what PAPSS is trying to do is to actually remove all those bottlenecks, reduce the cost and all of the complications that exist with cross-border transactions, make the payments effective, and allow commercial entities on the continent to focus on doing the business instead of spending days, for example, waiting to confirm payments or start bothering themselves about sourcing for FX. So PAPSS actually brings a solution that allows these commercial actors to focus on their business and not worry about how a transaction that originated in Lagos, Nigeria, ends up in Kenya and possibly in Kenyan shillings.
Just listening to you makes me feel that the vision of the Africa We Want Agenda 2063 is within grasp in terms of what the founding fathers of our continent had in mind. This is excellent news indeed. Let me turn to your viewpoint. In your brilliant viewpoint in Foresight Africa 2022 this year, you wrote, and I quote, "It is said that while money is the lifeblood of an economy, a well-implemented payment infrastructure is its circulatory system." This quote is indeed a profound statement on page 88 of our report. Could you explain what you mean by that to our listeners, please?
Okay, thank you very much. Economists have defined ways of measuring an economy, the activity in an economy, and all that encapsulated in the GDP of an economy. Now, if you try to compute the GDP of a country, the consumer spend, the government spend, investment, and then you now factor in the net of imports and exports. Now, you find that all this spend is actually an exchange of goods and services. Okay, so you exchange value for a good or a service. Now, the trigger for that exchange to take place is payment. Now, without payment, trade does not take place. So governments, individuals, and businesses, they don't eat money, they consume goods and services. And therefore, if payment doesn't take place, then that consumption of goods or service will not take place. So you find that the more a payment system is efficient, you find that money circulates much more. If you look at any of the economies where instant payment has been implemented, you find that immediately instant payment takes place, begins to happen in an economy. You find that the circulation of money, capital, goods, and services actually is more frequent and actually has a significant impact on the economy of that market. Much the same way, when payments becomes more efficient on the African continent, it will have a similar effect. And beyond looking at electronic and digital payments, in the days where it used to take 7 days to clear a check, once the clearing of that check moves from maybe 7 days to 3 days or to 1 day, you will see an immediate impact in terms of the economy of that country. So much the same way, payment system is actually that circulatory system that circulates money throughout an economy. So to that extent, a good payment system becomes the circulatory system of any economy.
Fascinating indeed. The lifeblood of the economy, as you put it. Now we get it, yeah? So let's turn to a practical example, Mike. Let's suppose that I am from Botswana, one of my favorite countries on our continent, and I import cocoa beans from, say, Ghana or Cote d'Ivoire, or indeed from Western Nigeria, right, for my chocolate factory in Gaborone, Botswana. Could you tell me how exactly the new payment system will work?
This is exactly why PAPSS was put in place. And these are all of the challenges that importer or that trader in Ghana would face today. These are the challenges that PAPSS was designed to solve. So let's take it back. Now, this cocoa beans producer in Ghana needs to sell his beans to this factory in Botswana. Now, they both agree on, of course, for anything selling and buying, there needs to be the agreement. This is a fair value for the product that the importer would like to buy. So the exporter communicates that this is the amount of money he expects in exchange for his cocoa beans to the buyer in Botswana. Now, PAPSS is such that this buyer is able to go to his bank and give an instruction to say, I have the local currency in my account, debit my account, and pay X amount of money to this supplier in Ghana. Now, that message immediately is triggered in Botswana, debits the customer's account, and instantly a message is sent into our system. And that same instant, it's able to trigger a payment from the settlement position of Ghana, the Ghana Central Bank, into the commercial bank account of the exporter, and at that same minute, trigger a payment directly into the beneficiary's account. So all of this process, first of all, it's able to confirm that the importer has the value in his account. It debits the account and then triggers a message, and the beneficiary's account is credited on the other side. And then settlement takes place at 11 o'clock every single day, Cairo time, between all the various parties, specifically between the central banks, and then there's a secondary settlement that happens between the commercial banks. And all this takes place within 120 seconds. And this importer does not now need to start looking for any third-party currencies. He's able to give that instruction in his local currency. So for emphasis sake, a transaction that originates here in Cairo, Egypt, in Egyptian pounds, will arrive in the destination, say in Nigeria, in Nigerian naira, or in Kenya, in Kenyan shillings. So that's the beauty of this. So we've removed the burden of sourcing for FX from commercial actors, and we've allowed the central banks actually to now settle amongst themselves so that business people can focus on their business while knowing that PAPSS and the central banks, while also leveraging the commercial banks, will settle his transactions seamlessly. And these transactions get to the beneficiary account in 120 seconds.
Wow, that is absolutely fascinating. Let me just get this straight for the benefit of our listeners. So basically, in the past, as a Botswanan would basically be exchanging my pula for dollars in order to pay my Ghanaian seller, right? What you're telling me now is basically that I don't need to look for dollars. I will just have my Pula denominated account debited in Gaborone, Botswana, and then my exporter, the guy I'm buying from in Ghana, gets his account credited in Ghanaian cedis, and the intermediation of dollars or euros or franc is no longer there. Is that what you're telling us?
That is correct. So the transactions originate in local currencies and they terminate in local currencies.
That's brilliant. That's fantastic. So let me turn now to some of the issues you're facing. What do you see as the biggest issues in cross-border payments, and how is PAP addressing them beyond what you've just shared with us in this example between Botswana and Ghana?
So I would say there are basically 5 key issues with cross-border payments. There's the issue of the costs, and the issue of cost is brought about by today you have a network of corresponding relationships that stand between the point of origination and the point of termination of those transactions. And of course, with each of these midpoints in place, it has an impact on the total or the overall cost of the transaction. The second one is speed. Today, when you look at Ghana is almost like another entity within Nigeria because of the relationship that exists between the two countries. There are actually more flights from Lagos into Accra than from Lagos to a lot of other cities in Nigeria. And it takes about 45 minutes to 50 minutes for that journey from Lagos to Accra to take place. Yet, when you send money for a payment, a commercial payment, it takes 3 to 7 days for that money to actually arrive at that destination. So there's a huge issue with speed or delays in the transactions. There's also the issue of transparency. Not knowing exactly for the customer is almost like an opaque system. Is not able to say that this is exactly how much this transaction is costing it. Is not able to say, okay, these are the factors that are influencing the cost, and so on and so forth. So there's the lack of transparency. There's the issue of access. Today, you find that because of access issues, there's a lot of informal flows, a lot of cash. If you stay in Lagos, you see a lot of cash going across the semi-border. Okay, if you go to the eastern flank, you see a lot of cash between Nigeria and the Cameroons. Then between DRC and Rwanda, between Kenya and Uganda, and so on. Part of it is an access issue. Then there's the issue of FX. Now, because a lot of the trades that we do today, there's a lot of the requirements to source third-party currencies to do those trades. What that has continued to do is to create a demand, continue to enforce a demand for these third-party currencies, and it has a weakening effect on all of our local currencies. So I would say FX is also a major challenge. So what PAPSS has done as part of designing the product is look at each of these constraints and actually come up, design into PAPSS a solution for each of these constraints. So for the issue of delays, PAPSS delivers transactions in 120 seconds. As a matter of fact, during the pilot, we were averaging around 7 seconds for those transactions to complete. Come to talk about the issue of cost. Now, by cutting out all these networks of corresponding relationships, and just to share with you an important information, of about 80% of transactions that originate in Africa and terminate in Africa, 80% of them actually have to leave the continent and go somewhere else around the world, either to New York or London or wherever, before coming back on the continent. Okay, so that is a part of what adds to the cost of doing business for businesses in Africa. Then you look at the issue of transparency. We actually have streamlined the way the cost or the pricing for cross-border transaction is done. And we have also made the effort to significantly lower it such that businesses do not have to pay so much to do these transactions. And then on the subject of FX, what we've done now is to make sure that the transactions can be done in local currency, both on the send and the receive corridors of the transaction. So we've taken each of these challenges that have affected cross-border payments on the continent, and we've designed a solution into PAPSS for it.
This is absolutely fascinating. So obviously, there are also serious macroeconomic dimensions to all this, which will warrant a different conversation, because essentially, by doing this and using local currencies at both ends of the trading spectrum, the inordinate demand for third-party currencies is dramatically reduced, basically, between importers and exporters, which is a phenomenal outcome for the continent.
Absolutely. You got it exactly right. We hope that as PAPSS begins to gain traction, that more businesses, and just take, for example, the airline industry. So an airline out of East Africa operating in many states across Africa is happy to repatriate his money in a third-party global currency, but then he's also satisfied with receiving his funds in his home country currency. What PAPSS will do is to make sure that he's able to get his monies repatriated from any country where he's doing business, and he's able to receive it in his home country currency. And it's, again, our interactions with the airlines is such that this is actually a phenomenal solution to the problems that they have doing business on the African continent.
That's fascinating, fascinating. Let's now turn to the, if you like, landscape as such. What does the African payment landscape look like today, and how can it evolve, in your view, with this new initiative, the PAPSS?
It's such a fantastic question. The continent continues to struggle with very significant exclusion, financial exclusion. A number of initiatives have been launched in different parts of the continent to alleviate that challenge. Now, if you look at the landscape, we still have the traditional players, being the commercial banks in the various countries, who now are beginning to also scale beyond their primary market into a number of other markets. But then you also have a number of emerging players who have now leveraged on technology to begin to now create solutions that will address different areas of financial services, from savings to retail to making purchases and so on and so forth. So technology is beginning to change the financial services landscape on the continent. But when you look at Africa, I met a brilliant fintech somewhere in East Africa operating out in Rwanda, operating out of a small market of about 10 million people. However, they are succeeding and doing so well. But what PAPSS is saying to such an entrepreneur is to say, you can actually begin to look at the entire Africa as your market rather than just looking at the people in Rwanda. So what PAPSS will do, PAPSS will enable both the traditional players who today are actually facilitating the movement of funds. They will see a significant reduction in the cost of providing these services. And we hope that those significant reductions will also be passed on to the customer in terms of lowering their cost of doing business. Right. But beyond that, we also think that for the tech people, that they will also see significant impetus to actually ride on the platform that PAPSS has provided to be able to scale their services beyond just their primary market. So they should be able to now begin to look at launching that e-commerce business in many more countries. And that is the way that Africa can begin to create entities that are in the scale of Alibaba, in the scale of major e-commerce providers globally. Now, what we've done, and if you don't mind, I'll just step back a little to really just
go ahead.
paint a picture of how PAPSS is able to do that. So what PAPSS has done is to build at its core an instant payment system that has the ability to clear and settle transactions in local currencies, that has a dispute management mechanism, and we've built around this a number of key governance organs. The first governance organ being the PAPSS Governing Council, which has the central bank governors of all the participating countries. They sit there and they are the highest regulating decision-making organ in the PAPSS world. Because this is a financial market infrastructure, governance is very, very, very key. The second organ is what we call the Payment Systems Oversight Committee, which is an organ that is made up of the directors of payments of each of these central banks, and they have direct supervision and oversight over PAPSS, okay? And then the third organ is now the board of PAPSS, the board of directors of PAPSS, which has eminent people from across the continent who sit on that board. They help, they guide management in the area of execution, in the area of operations, and really just running the business from day to day. And then, of course, the last organ is the management team of PAPSS. So all these are the core of PAPSS. Now, on top of this, we've now added central banks. Today, we are connected into the 6 central banks of the WAMZ region. And we've now signed up with an additional 2 central banks that have now agreed to join PAPSS. And we expect to be announcing an additional 3 in this new quarter that we're in. Now, on top of these central banks, we are now layering on top commercial banks and other licensed payment service providers. A regulated entity, so we are not going to do anything outside of what we agreed to do with the central banks. And then on top of these payment service providers and commercial banks, we've now created an innovation layer. And that innovation layer, people can begin to build solutions around invoicing, around remittances, around e-commerce, and so on and so forth, riding on the infrastructure. That way, PAPSS begins to now enable the landscape. So beyond what you see today as the landscape, we expect that PAPSS will enable the next 100 unicorns on the African continent in a few years' time. We expect that banks would see a massive increase in terms of the volume of trade that they enable across the continent. So it's win-win for all participants within the landscape.
Wow, that is a complete transformation of the way of doing business on the African continent. Now let's turn to what is happening now, Mike, in Europe, right? The big elephant in the global room today is, of course, the Russian invasion of Ukraine, which has, as we all know, triggered unprecedented sanctions on Russia. How will PAPSS handle global payment issues such as sanctions?
Africa is a part of the global community. A few people thought initially that, oh, this is something happening in Europe. It will not have impact on the African continent. But without going into the politics or my personal views on what is happening, it has become much more apparent that Africa needs to be able to build and control its own payment rails and designed in such a way that it's able to meet African needs. If you look at a lot of the systems to date that have been built or that run financial services globally, they were designed more to meet the needs of people outside of the African continent. Now, what this is saying to us is that we need to begin to build systems that are uniquely designed to solve African challenges. Mm-hmm. So we cannot have a situation where payments on the continent will have to travel halfway around the world before coming back to the continent, and where we cannot even control whatever the parameters are around how these transactions are going to be allowed or not allowed through all those transit stations. So again, what this is reinforcing for us is that beyond the payments, Africa needs to now begin to look at its supply chains. The battle has now led to a situation where there is a scarcity of wheat everywhere in the world. But Africa needs to now begin to look at its supply chains, make sure that it's able to produce and be sufficient to guarantee food security, sufficient to guarantee a number of other things to its own people. Now, when you look at the continent, again, some of the data we see shows that we haven't been able to, first of all, add value to the products that are produced on the continent, and therefore we continue to have those dependencies on entities outside of the continent. By the way, I'm not by any stretch preaching a maximalist agenda, but what I am saying is that Africa needs to be able to increase its trade with itself. Trading at about 17% with itself is not sustainable. Africa needs to be able to significantly increase the volume of trade that it does with itself. So what Ukraine is saying to me, and I'm hoping to African leaders, is that we need to begin to take our destinies into our own hands and begin also to build systems that will make us more self-sufficient than now that we are dependent on the rest of the world.
Now, this is fascinating indeed, Mike, because the point you make about the need for increased intra-area trade between African nations, I couldn't agree more, because at present, Africa trade with itself is about 17%. And when you compare that to the EU, for example, where intra-EU trade is at over 66%, and then in Southeast Asia, where I used to live many years ago in Manila, that whole region, the ASEAN group of countries, they trade with themselves. Over 50% of their trade is intra-area within themselves. So we hope that if what you're saying is basically, as we move forward towards Agenda 63, PAPSS will also enable us to make sure we lift intra-Africa trade beyond the current 17% to something much, much higher. The other thing I was just thinking of course, these technology dimensions you talk about, PAPSS, etc. There are also the movement in the Continental Free Trade Area to lower tariffs, which of course is one of the first port of call when it comes to economic integration. You and I also know that the so-called non-tariff barriers, of which you're addressing one through perhaps the infrastructure deficiencies on our continent. Any thoughts on that, on what is being done to really enhance infrastructure beyond what you're saying in PAPSS right now?
So yes, I always talk about three critical pillars, and this is my own view. I think that one is an enabling demographics. Today, we have a very youthful population. We have the acceleration of mobile penetration. We have a number of key data infrastructure that are being done on the continent, but we are still quite behind in terms of a number of those infrastructure. You talk about enabling environment, and in that enabling environment, you have things like power. We still have a lot of catching up to do from a broadband data and fiber infrastructure, a number of other key infrastructure that we are still behind on. Now, I have the third pillar that I call key fourth industrial revolution infrastructure, and they have to do with payments is one of them, identity is one of them. We need to have this key infrastructure in place. But more importantly is the fact that Africa has the right demographics in terms of people. The people are not a problem for Africa. The people are actually an asset. And we need to invest more in human development and human capacity building such that we will have the right types of human resource to help propel the continent in the fourth industrial revolution. So my view is that Africa, that was described previously as the dark continent, I recall a Time magazine feature where they put a picture of the globe. And it was actually a satellite image, and you could just see a continent that just seemed to be dark. All those underdevelopment and so on, in my view, are significant opportunities for the continent, but we need to invest in the people. So I hold the view that infrastructure is good, but without building the people, the infrastructure will not add much value to the continent.
Absolutely. In other words, human capital. Human capital is key to the future of our continent. Obviously, PAPSS is a fascinating innovation, but it's not the only game in town. So who are the movers and shakers in the payment space, and how will PAPSS work with these in the future?
Okay, so again, when you talk about the movers, I like to separate the movers from the shakers. So again, the traditional and the legacy financial service providers continue to be the movers driving economic activity on the continent. However, you would see that a lot of margin and new entrants beginning to blossom on the continent. And what they have done is each of them finds an area of a challenge or an area where there's a gap that is not currently being filled by existing players. And then he innovates within that gap, and then he's rewarded for that innovation. So I think that those are the ones that are now shaking the tables in the financial services landscape. But also critical is to look at some of the key trends that we're seeing in the payments landscape. We will continue to buy more online. Every year, we are going to do more online than we did in the previous year. And we expect that in the next maybe 5, maximum 10 years, we will be buying more online than we buy in physical brick and mortar locations. That will have an implication for payments. There's also the issue of fraud. The fraudsters are actually getting smarter by the day. And the trick for financial service providers is to always be one step ahead. Okay, we will have to continue to advance and improve our investments in cybersecurity to always maintain that one step ahead of the fraudsters. You look at data. Data is the new gold. Back in the days, money used to be physical cash sitting in the vaults. But today, money is a set of ones and zeros. And to that extent, digital data has become more important, and how to secure that data has become very important. So data and data security is very critical in the payments landscape now. Instant payments, like I said, is going to continue to revolutionize, and Africa is actually leading in that respect. Recently, a colleague of mine attended a conference in Europe, and they were announcing that so and so country has now joined the instant payment. Instant payment has been around in Nigeria for more than 10 years. So Africa has an opportunity to leapfrog in that sense, but I will not finish talking about trends without talking about the emerging blockchains, cryptocurrencies, and CBDCs. Again, I have my own personal views, but the benefit that blockchain infrastructure offers compared to some of the legacy type infrastructure that we've used is something that just cannot be denied. The issue of immutability of data, the issue of even data security and so on, will continue to push more use cases on the blockchain infrastructure. And of course, we now see that the central banks are beginning to now be very bold about their adoption of CBDCs. A case in point is the e-Naira that is beginning to do quite well within the Nigerian context. So these are some of the things that I believe will continue to shape the landscape in the years to come.
For the benefit of our listeners, since we can't delve in the time we have available more into what Mike is referring to as data is the new gold and data is the new oil, I would like to refer our listeners to our chapter on technology in this year's Foresight Africa, Chapter 5. There we see a number of well-targeted viewpoints, one by Leslie Go and Bushley Gosler on data governance in the private sector. There is also another one on the role of cryptocurrencies in sub-Saharan Africa. And there is another viewpoint on data governance in the public sector. So this is clearly a very, very important point that Mike is making. And I would like to refer our listener to kindly download our Foresight Africa 2022. We were in Accra on March 21st, and we launched Foresight Africa 2022. And Honorable Wamkele Mene, Secretary General of the African Continental Free Trade Area, was on our panel. He spoke about many, many things, but one of the takeaways from his panel contributions was this whole notion of the micro, small, and medium-scale enterprises as the lifeblood for job creation, especially for Africa's youths, for boosting imports and exports, and of course, economic growth in our continent. What are you currently doing to raise the awareness about PAPSS among small, micro, and medium-scale enterprises on the African continent?
That's an excellent question. Let me also, at this point, acknowledge the significant role that the AFCFTA is playing in the evolution of PAPSS, and to also acknowledge that they're actually co-pioneers with Afreximbank of this infrastructure for the continent. I do agree with the SG that SMEs, both micro and small, medium enterprises, actually, they hold economies everywhere in the world. You find that they're actually the ones that drive most of the economies everywhere in the world. So to that extent, we have also recognized that we need to be able to engage these ones. So we've flagged off a number of initiatives. First of all, we are talking to different trade associations and leading businesses and trade groups in the different countries to begin to express to them the value that PAPSS will bring to that small shoemaker that is in Aba, who is developing shoes today and putting a brand that is not African on it because he thinks that that brand can sell, but letting him understand that the infrastructure that PAPSS is providing will open up markets for him across the continent. So he can focus on making his shoes and not worry about the buyer in Ethiopia who is paying beer and how that beer turns to Naira for him in Aba. So we're engaging a number of key institutions and groups and associations and explaining to them the connection between PAPSS and these SMEs and opening up of new markets. Now, beyond this, we're also working with our key partners, which include commercial banks and the tech community, who are now looking at how to innovate for these SMEs. People are innovating bookkeeping software and seeing how that ties into inventory in a totally different country. People are innovating invoicing solutions and making it available to SMEs across 55 countries. So all these are to bring value. And beyond this, like I said, PAPSS creates on top of it an innovation layer. PAPSS cannot innovate everything that will be needed for these SMEs. What we've done is to create that layer such that budding entrepreneurs can actually innovate different solutions for these SMEs and be rewarded for the value that they create for the SMEs. So it's a cocktail of things that we're doing to continue to bring the value closer to the SMEs and to the consumers across the continent.
That's incredible, because basically, as indicated, job creation is largely driven across our many countries on the continent by small and medium-scale enterprises. Mike, to wrap up our conversation, I wanted us to switch gears to this whole notion of a single regional currency. As you know, in West Africa, the Economic Community of West African States are basically negotiating to move towards a single currency. In East Africa as well, the East African Community countries, Kenya, Tanzania, Uganda, and the rest of them, of which Congo DRC just joined yesterday, they're also planning to have a single currency. Based on what you shared with us today, is there really a need for African policymakers to pursue single currencies in their regions when, in fact, we now have an innovation like PAPSS, which you're currently leading?
Again, when I look at single currency, I look at it from the point of view of it creates a single market. It now becomes more or less a final step in creating of a single market, in my view. Now, when you define a market, the market has participants, the market has rules, the market has a means of payment, which typically is the legal tender in that particular market. And then it has things like logistics and so on and so forth. Now, what PAPSS has done is actually to take this process one step further. So we're saying, instead of creating one single currency, we are going to make your own currency acceptable for trade across borders. Now, there are still significant benefits in having a single currency across a region. And again, it helps PAPSS. PAPSS will now, instead of having maybe 14, 15 exchange rates, we can have a single rate against that one currency. So there are benefits. I think that there are a number of political moves that will need to be made to enable that. But what we're hoping is that PAPSS will actually be a very solid and bold step in that direction and in the direction of creating a powerful Africa. And therefore, when we do arrive at that single currency, it will be a solid currency that is able to capture some of the things that today we are not able to document around the trade that takes place on the continent. So I believe in a single currency, and I think that it will add significant value. But our focus right now is even to make payment as it is more efficient and therefore begin to grow trade on the continent.
Yeah. Mike, on behalf of the Africa Growth Initiative at Brookings, I would like to thank you very much for joining me today in this fascinating conversation on the new payment system developed to boost intra-area trade on the continent of Africa. Thank you very much, Mike.
Thank you very much for having me. My pleasure.
I'm Aloysius Uche Odu. This has been Foresight Africa. To learn more about what you heard today, find this episode online at brookings.edu/Foresight Africa podcast. Each episode will be listed on its own webpage, and there will be links to the content discussed in the episode. The Foresight Africa podcast is brought to you by the Brookings Podcast Network. Learn more at brookings.edu/podcasts. Send your feedback and questions to podcast@brookings.edu. My thanks to the production team, including Fred Dews, producer, Tamara White and Christina Golubski, associate producers, Gaston Riboredo, audio engineer. The show's art was designed by Shavanti Mendez, based on a concept by the creative firm Blossom. Additional support for this podcast comes from Ramen Preet Kaur, Ian McAllister, Chris McKenna, Soren Mesna Zaidel, Chris Peters, Andrea Risotto, Esther Rosen, and Ashley Wood Schelling. Thank you very much.